traders, it's Sir Willoughby, and welcome back to the Stock Hustler Network, and you tuning in to the Hustle House. And you get what I'm saying? We got a lot of good data going on this week, man. If you trade this week, buckle up because volatility is about to pick up in a major way. We got CPI data inflation that just came in at 8:30 a.m. while I'm recording this. We're gonna get into it. Got Fed Chair Kevin White speaking at 10 a.m. We got PPI data tomorrow on Wednesday, and the start off bank earnings season just kicked off today with Wells Fargo and Bank of America reporting this morning. And we got rising U.S.-Iran tensions still on the rise right now, so we far away from a cease talk or the war even being over. Also, that spiked oil higher yesterday, back above $80 a barrel. That have already pushed the oil prices real high. So the markets are heading into one of the busiest weeks of this quarter. So expect fast moves and sharp reversals. Let's jump into it so we can see what I'm watching. So the outlook today, I got a few notes I'm going to read off of. Today's biggest catalyst is the CPI. If inflation comes in cooler than expected, we could see buyers step in and push the growth stocks higher. But if CPI surprises to the upside and expect yields to rise, pressure on tech and increased volatility across the market. Just expect that. Then at 10 a.m., we got all eyes going to shift. All eyes is going to shift on Fed Chair Kevin Warsh. Traders will be listening closely for hints about future interest rate hikes and the policy moving forward, especially after the inflation report today and tomorrow. Tomorrow we got producer price index. This is a great gauge that the Fed like to look at outside of the CPI and the PCE, giving us another read on inflation from the producer side before markets start pricing in the Fed's next move. To jump into the Iran and oil situation, another major story is in the Middle East. Tensions involving Iran continue to escalate higher, and oil has pushed prices. Oil has pushed higher as traders price in potential supply disruptions. Higher oil prices can fuel inflation concerns, which is why today's CPI number becomes even more important. Energy stocks could remain strong, while higher growth sectors may see increased volatility in the crude as crude continue to climb. We got earnings season. This week has officially kicks off our earnings season for Q2. The major banks report first, and they'll set the tone for the rest of the market. Strong earnings could help support the indexes. Weak guidance could trigger broader profit taking. Expect volatility before and after each major support. Here's the levels I'm watching, and I'm going to pull the charts up so you can get into it and you can see exactly what I'm saying and what I'm looking at. First we're going to dive into the SPY. I think I got this SPY. Yeah, that's the SPY pulled up. So first we're going to jump into the SPY. SPY is sitting right around the previous day's low. The bullish sentiment, we need to see this thing reclaim 525.94. That will be the previous month high. And above 525.94, we got 528, the previous day high. And then we know we're going to a higher high, back up to the 550s. I'm sorry, that's the wrong. Yeah, that's the wrong. My bad. That's the wrong one. That's the wrong one. We ain't looking at no 550. We have 528. Hold on, let me pull the chart up. My notes got wrong on that. Let me pull the SPY up. There we go. So on the SPY, take that back. Reverse. On the SPY, we looking at the price is trading above by the previous day high, the 753. The 755 would be the previous week high, and you got the 760 as the previous month high. If we get I'm watching for the break over this previous week high, the 755. If we get to move back up to touch the 760, I would then wait for a potential move over that 760. But in the middle, we can catch a move from 755 to 758. And I love to play a call on that if we get to move over that previous week high. But until then, I would be waiting on calls because it's got a good resistance down at that level. And we dive into the QQQ. This is what I see for QQQ. On the QQQ chart, let me make sure it's the right one. All right, boom. So on QQQ, we need to reclaim the 716 on the bulls level. We reclaim a 716 on the bulls level, then we'll then retrace the 718. Above the 722.30 opens room toward the 726.85. And I'd love to see that, reclaim that so we can get the break over for another move higher. But on the bear side, if we lose the 710, then watch the 701. That's a critical level. The strong resistance still sits near the previous month's high around the 737.88. If CPI comes in hot, which I'm going to give you that data in a second because it just came in, QQQ will probably see the biggest reaction to the down or the upside. IWM, let's check our small caps out. As we look at our small caps, my bad about that. Let me fix the screen. As we look at our small caps, we got continuing showing relative strength, but remain very vulnerable. On the bull sentiment above 295.86, above 295.86, then we got the 296.03 range. Next target will be 300. It hit the 302, but it's steady claiming to coming down once it hit that level back to the 296, 298, and bouncing off that 294. So I love to see this reclaim that 296, 298 for the move higher back to 300. But if not, on my bear side, I see it below 292.59. Then the next move would be that 290.65. Major support is near the 288.97, which is bounced off 2 times previously. Which, watch yields closely. Small caps tend to react quickly to rate expectations. And then we're going to look at the Dow real quick because I trade all 4 of these. The Dow has held up better than tech. Let me make sure I got it right, guys, because I don't want to give you guys the wrong information. All right, boom, got it. Dow has held up better than tech. You got the bulls above 528.03, then you got 533.65 over the 528.93. So I love to see this break out over 530 for the move to 533. On the bear side for the Dow, because it has been running the last 2 months, and it ain't been getting a lot of downside as S&P 500 and the NASDAQ. So I like DIA. I like to see on the bear side, if it lose 522.83, then 521.20 is definitely where we're going. But strong support sits at the 509.92. And financial earnings this week could have a major impact on DIA. So we're going to keep our eyes on those levels on the chart. This is exactly what we want to be informed about when we moving forward. So what I'm watching today, here's my game plan. We're going to wait for the CPI data, which just came in. So let me give you that data real quick. We got S&P futures rising right now as we speak off that CPI report that just came in. So could be a little more bullish than we think. CPI futures rise after much weaker than expected June inflation data. So CPI rose today on Tuesday after June inflation data came in weaker than expected. Traders also weighed a slew of corporate earnings releasing and rising oil prices. The futures tied in the broad market index is up 0.4%. We're trying to get the CPI read, man. What a CPI read at, man? CPI rose 3.5% annually in June. The consumer price index increased by 3.5% in June from year-over-year period, below the Dow Jones census of 3.8 as energy prices rise. So overall, we got CPI 3.5%. The expected forecast was 3.8% prior to the 4.2%. And you got CPI month over month, 0.4% versus the 0.1% forecast. So month over month, it did raise, but it dropped a little bit prior to the 0.5% CPI. So we got kind of mild CPI data, not too much, not too less. Definitely would like to hear what Kevin Warsh got to say at 10 o'clock. Expect the volatility around 10 o'clock when he do come out and speak. Watch bond yields and oil prices. Let price confirm direction instead of predicting the move. Manage your risk. This isn't a week to overtrade. This is protect your gains, have your risk management, and wait for your setups because they could change instantly. Remember, in weeks like this, preserving capital is just as important as making it. Today, Stock Hustler Market Network, drop your thoughts in the comment, man. How you feel? You think we're going higher, we're going lower off the new CPI inflation data, and we got PPI tomorrow. Let's break it down. So I like if this breakdown helped you, hit the like button, hit the subscribe, hit the notification bell. And if you want to learn more, You know what I'm saying? Come over here to NexGen Traders in the school community. The link will be in the top description below. We actually running the 7-day free trial is over with, but you can get in for a limited time until Friday for $10 a month. After Friday, the price will be going up. And if you're already in the group, you're already in the school, you will be grandfathered in at that $10 price. But it's going up, so but it still be cheaper than $1 a day for you to start learning. We also over there we got the option trade course. Come on over here and start learning how to trade options as a beginner. So you can hop right in on the live trades that I be doing, or you can hop right in with the information that I give out. You can understand you won't be a deer in the headlights when this information come out. When CPI drop, you don't know how to trade. So jump in if you're a beginner. Come on over here, learn how to trade stock options. Also, this program is brought to you by Moomoo. I like to use Moomoo for their data, they level 2, level 3 data tools. They got great tools over here to dictate how I make these decisions. Also, on top of that, give you 8.1% on your money for your uninvested cash. Please tap in with Moomoo. The link will be below. Once you invest $100, you get that 8.1% and you get some free NVIDIA shares along with that. So I hope this, you're serious about learning option trading and technical analysis, man. Please join NexGen Traders. Until next time, trade smart, manage your risk, and I'll see you at the opening bell that's coming up very, very soon. I'll see you at the opening bell that's coming up very, very soon. And you know the slogan, motivation plus dedication equals progression. And I believe in you. Let's go.